Hey everyone, welcome back to Corporate Decoder. Today we're unwrapping a filing that is basically a financial treasure map or maybe a warning sign, depending on how you read it. Get ready because some of these numbers might just make you do a double take. And hey, before we dive deep, if you love getting the real story behind company filings, make sure you are subscribed. Also, our Discord community is super active and linked right down below, so come hang out. Alright, so what we're looking at today comes from Jefferies Financial Group Incorporated, or Jeff as you might see their stock ticker. This report, filed on the 7th of January 2026, is a snapshot of their financial scene, primarily focusing on their results for the quarter and the full year that ended on the 30th of November 2025. Think of it as a company's annual report card, but this is a more immediate current report. Now, Jeff isn't just about common stock, they also have quite a bit of debt in the form of these senior notes. We see notes due in 2027 with an interest rate of 4.850%, as well as notes due in 2028 at a higher rate of 5.875%. Then there are longer term debts, like the 2.750% notes due in 2032 and the 6.20% notes due in 2034. This tells us they've been borrowing money to fund their operations or growth, and these interest payments are a significant part of their financial obligations. The core of this filing is all about results and how the company is doing financially. On the 7th of January 2026, Jeff put out a press release detailing their performance for the period ending the 30th of November 2025. This is where the real meat and potatoes are, the numbers that tell us if they're winning or losing in the marketplace. This press release, which is attached as an exhibit, is our main guide here. It means the company is providing us with their latest financial update. Whenever a company issues a press release about their financial results in an 8K filing, it is usually to make that information publicly available in a timely manner. The key thing to remember is that this information is furnished, not technically filed in the same way as some other documents, which has some legal implications, but doesn't change how important the numbers are to us. This section is basically a table of contents for the supporting documents. Here we see Exhibit 99, which is that press release we just talked about containing the quarter and year-end results. There is also Exhibit 104, which is the cover page in an interactive data format, essentially making the filing easier for computers and fancy financial tools to read. I've got my magnifying glass ready and I am diving into that press release, Exhibit 99, to see what is really going on with Jefferies Financial Group. Okay, let's look at the top line for Jeff Financial Group for the full fiscal year ending the 30th of November 2025. Their total revenue stands at a substantial $4,776,171,000. That is almost $4.8 billion in revenue. If we compare that to the previous year, which brought in $4,558,550,000, we see a clear increase. This means the company is bringing in more money from its various business activities than it did the year before. That is generally a positive sign suggesting growth or better market conditions for their services. Now, bringing in more money is great, but what is left after all the expenses? That is net income. And for Jeff in this fiscal year, it is $741,532,000. This is up from a net income of $568,766,000 in the prior year. This shows they're not only growing their top line, but also becoming more profitable. They managed to turn $4.8 billion in revenue into over $741 million in profit. That's a healthy margin. And the fact that it's growing year over year is a strong signal that their business operations are becoming more efficient or that their investments are paying off. Let's look at what the company owns. At the end of this fiscal year, their total assets were $94,757,899,000. That is nearly $95 billion in assets. These assets include everything from cash and investments to physical property and other resources they use to operate. Total assets were $87,967,162,000. This growth in assets suggests the company is expanding its footprint or acquiring more resources to fuel future growth and operations. It means they're investing in themselves. On the flip side, we have liabilities, which is what the company owes. Total liabilities are reported at $76,294,199,000. This is a significant number, largely because of the senior notes we discussed earlier and other financial obligations. Comparing it to the previous year's $71,612,987,000, we see that their liabilities have also increased. This is often a consequence of growing assets and operations, as companies frequently use debt to finance expansion. The key is to ensure that the growth in assets and earnings can comfortably cover these growing liabilities. Finally, we come to equity, which is essentially what is left for the owners after all liabilities are paid. Total equity for Jeff is $18,463,700,000. This represents the net worth of the company belonging to its shareholders. It is up from $16,354,175,000 in the prior year. The increase in equity is driven by the net income earned, which gets added back to the company's value for shareholders. This rising equity, coupled with increased profitability, paints a picture of a company that is not only growing but also increasing in inherent value for its owners. So, what are we seeing here with Jefferies Financial Group? On the whole, the trend looks positive. They're bringing in more revenue, making more profit, and their overall value equity is growing. They're also expanding their asset base, which signals ambition and investment for the future. Of course, with larger operations and growth comes larger liabilities, and they're carrying a considerable amount of debt. The crucial question for any investor or observer is whether the company's growth and profitability are sufficient to comfortably manage this debt load. The numbers here suggest they are, at least for this reporting period. The increased net income compared to the increase in liabilities is a good sign. Overall, Jeff seems to be on a solid growth trajectory, demonstrating effective management of both revenue generation and cost control, leading to a stronger bottom line and increased shareholder value. The key risks moving forward will likely revolve around the broader economic climate, interest rate fluctuations impacting their debt costs, and their ability to continue innovating and outperforming in the competitive financial services sector. But based on this report, they're showing good strength. Alright, that is our breakdown of Jefferies Financial Group's recent financial report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord community linked in the description for more discussions like this. Thanks for watching, and we'll see you in the next one.